everybody. This is Patrick Randall, founder of Bulldog Financial Planning. This is a quick economic update on where inflation's been, where we are currently, and what that means for the current Fed rate cycle. CPI inflation has been coming down fairly gradually with some stagnancy month to month. We do see that in January 2025, in particular through the first quarter, CPI excluding food and energy starts to come down more significantly. We see that overall the CPI is trending more closely to the Fed goal of 2%. Now, the Fed's preferred measurement of inflation is called the Personal Consumption Expenditures Index, or the PCE. This is an inflation measurement that's tied to the GDP. It accounts for the varying amounts that people are spending in terms of weightings for each particular category. The PCE, you can see with food and energy, has dipped some in September 2024 down to 2%. And again, recently we're getting closer to that 2% target range. The PCE excluding food and energy has been stagnant as well, although we see beginning of this year, particularly the last few months, the rate has been coming down closer to 2, which is the Fed target. Now here's where things get interesting. You can see from this chart that the Fed didn't first cut rates last year until September. They cut it 50 basis points, down 0.5%, and then another 2 times in November and December for total rate cuts of 1%. That happened in 2024. When we look at the chart for PCE, you can see that that corresponds to when PCE inflation reached closer to 2%. For the rest of the year, we see the rates did come back up, and throughout the beginning of this year, over the last couple months, inflation's coming back down. And now we see PCE is very close to 2% again. Does this mean the Fed is going to feel more comfortable about cutting rates? We'll have to wait and see. The Fed did announce that they plan on cutting rates 2 more times this year, and that would be another possible 50 basis points or 0.5%. Now, what could prevent that from happening is if tariffs increase inflation enough that they don't want to cut rates. The Fed has already issued guidance that they plan on being cautious when beginning the rate cuts this year in 2025. And however, they do plan on cutting rates fairly significantly over the next few years as inflation does come down. What do lower interest rates mean for investors and consumers? Less interest earned on money markets and your bank accounts, although savings accounts still don't really earn much. This could also translate into potentially lower borrowing costs. As rate cuts get built into the economy and they flow through the economy, lenders may be able to loan money at lower rates. Rate cuts have historically been good for the stock market. That could happen again. In addition, the bond market may benefit on existing bonds because as interest rates come down, typically bond prices go up. PCE for May is going to be announced tomorrow. The next Fed meeting isn't until the end of July, and there are another 3 meetings for the Fed during 2025. There's a lot of economic information out there, and the Fed doesn't guarantee that they're going to cut rates at any of the meetings, but they do anticipate to cut 2 more times. A few last things. Investment results can't be guaranteed. This information is not intended to be a recommendation to buy or sell securities. Bulldog Financial Planning, LLC is a state-registered, independent, fee-only fiduciary RIA. And thanks for listening and taking the time to watch this short video. Feel free to reach out using the contact information that we have here. You can reach me by email, you can reach me by phone, or you can always reach out through my website. Please like and subscribe if you like this information and want to hear more. Hope you have a great summer, and thanks for tuning in.